Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open and I'm Shah. Let's go straight to the headlines. Asian markets falter as the threat of a trade war deepens, a bit of a recovery from the intraday lows. Donald Trump's top economic advisor Gary Cohn steps down even as the US president mulls fresh sanctions on Chinese imports. The PNB fraud may force the government to re-evaluate its 2.11 lakh crore bank recapitalization plan. An Axis Bank declares a 200 crore exposure to Nirav Modi and Mehul Choksey firms, says it's cooperating with the various investigative agencies probing the fraud. Well, if that didn't spook the market yesterday, I don't know what did. But let's take a look at the trade setup for the morning. Remember, yesterday, Indian markets fell despite the globe looking a fairly healthy picture. Asia had a fabulous outing yesterday. Europe was doing much better. But despite that, we had a fall. And while the 1% cut may not seem to be too deep, it was, in a manner of speaking, a steep fall. Nifty Bank led the way. It was, in a sense, a key culprit for yesterday's fall. And now we all know the reasons on post-mortem. You would know that if there is murmurs of fresh banks or private banks being also involved in some way or having some exposure, as Axis Bank has said as well, and if you don't know the extent, then there will be some excitement. You essentially setting the cat amongst the pigeons, and that's essentially what happened in banking by and large yesterday. 1.5% lower. No alarm bells, but we did break some key moving averages, some key support levels, and now the Nifty is merely 120 points away from the 200-day moving average. Remember, it's not broken past the 100 DMA in the last 1 year, and I know there are different statistics which speak about whether you look at one year charts and then look at the RSI indicators, or narrow it down or broaden it up and bring in other elements as well out here. But just simply put, the 200-day moving average has been sacrosanct until now. The Nifty is about 120 points away from those levels. Let's wait and watch what happens there. The March series Nifty and the Bank Nifty OI both saw a further build up in trade yesterday. So the Bank Nifty OI up 8%, Nifty OI up 5%. Suffice to say, fresh shorts out there. If you look at the FI positions as well, after a really long time, FIs seem to be net short on the markets. This hasn't happened. So on the cash side, they may be buying, but on the future side, they are net short. Maybe hedges, maybe otherwise. Let's wait and watch what happens during the course of the next few days. And a critical element of what's been supporting the market for the last maybe 14 odd months, DIIs, that number is starting to wane a little bit. In a number of times in the last few days, we've seen that DI number having a sell number too. In yesterday's session, 2 DIs, net sellers on the cash side. So that may be a bit of a worry. We'll analyze that a bit later on. First, some stocks to watch. And I know aside of the usual suspects and the stocks and news, which we will discuss, I thought 2 or 3 stocks stand out and chosen the larger ones. Reliance Industries, if you simply do a quick check of what the latest fall, the last few days, the last 5 days have seen, Reliance is amongst the top contributors, one of the many, but amongst the top contributors, has corrected about 4.5, if I'm not wrong, in the last few days. So this remains a focal point. I was speaking to a couple of technical experts yesterday, and it's very, very close to levels below which, if it breaks down, could crack substantially. Do watch out for Reliance Industries. Yesterday, the whole alcohol pack was down and out. Maybe the excise duty in Haryana was being blamed as the key culprit, but you now know that there are other reasons as well. Morgan Stanley in its note says that the risk of GST being levied on extra neutral alcohol has re-emerged as well, and United Spirits amongst other stocks may trend lower amid this ongoing debate as well. It's back to 3,000 is United Spirits from levels of almost 3,800 before it came out with its numbers, and a positive commentary. So interesting to see what happens to this space. The sentiment isn't positive out here. 4 or 5 states have now hiked excise in a meaningful way. That doesn't augur well for volume growth. Well, a positive note on Titan, not surprised there. BofA joins the list of brokerages which are very, very bullish on this one. They've raised the target price to 920 from 770. Let's wait and watch what happens. Then there is this whole note on financials and banks, and we'll talk about all of those, and a clutch of stocks in news as well. Road construction companies have gotten a slew of orders. And there are some FPI limits raised on certain names. So all of those is something that we'll talk during the course of the day. But first, tell you what's lined up on first one. The government may be forced to go back to the drawing board as the 58,000 crore earmark for banks to raise from the markets are in jeopardy. Shraddha Bawla joins in to tell us what brokerages are making of the financial services space, and we try and see what's hurting the Indian markets in line with what's happening with the globe. And finally, end with something which is positive. Somit will join us to tell us why the oil marketing companies may have a good fourth quarter. The first news of the day, a PNB fraud may force the government to re-evaluate its bank recapitalization plan. The 58,000 crore that the public sector lenders were supposed to raise from the market is now under threat, said a senior government official to Bloomberg Quint. Nikun Joshi sums up all the developments in this report.
The government may re-evaluate its recapitalization framework for infusing capital in public sector banks for the next financial year due to the recent developments that have taken place in the public sector banking space, like the Nirav Modi scam and expectation of more public sector banks being brought under the prompt corrective action framework of the Reserve Bank of India, a senior official told Bloomberg Quint. Now remember, the government had announced that it would infuse about 2.1 lakh crore rupees in public sector banks in the current and the next financial year, out of which 1.2 lakh crore rupees would be infused in banks for the next financial year. Now, out of this 1.2 lakh crore rupees, public sector banks were expected to raise about 58,000 crore rupees from the market, and this would be difficult considering more banks are expected to be brought under the PCA framework of RBI. For the current financial year, things would stay as is, where the government has announced that it would infuse about 88,100 crore rupees in public sector banks through issuance of recapitalization bonds and through budgetary allocations.
Well, it's back to the drawing board in a manner of speaking, and you don't know what's the kind of painting that will come out now. Well, it'll be an interesting time for the PSU banks. But what are experts, what are brokerages making of all of this? What's our brokerages making of the banking space by and large? Because the banks have been bearing the brunt of the market sell-off for the last few days. But does the price correction create a case for investors to step in? It's a $1 million question, very difficult to answer. But Shraddha joins in with what some of the biggest brokerages are saying. Shraddha, good morning.
Good morning, Neeraj. So I'm going to start off with the outlook for PSU banks. So this is based on a Credit Suisse report where they're saying that the bond hit will continue to add to earnings pressure as far as PSU banks are concerned. In fact, for the fourth quarter, that is the January to March quarter, they've estimated a potential treasury loss of 20,000 crores for these PSU banks, which is thrice what they had seen in the last quarter. They see these large losses given that they continue to hold some of these large bond holdings, and even as the bond yields continue to trend upwards. In fact, they have also said that the rising bond losses would add to concerns about the adequacy of government's bank recap plan, and some sort of RBI intervention would be necessary to contain those MTM losses. So nevertheless, they've said that they continue to prefer private banks over PSU banks. With respect to the fourth quarter treasury losses, they have estimated SBI's loss to be about 10,800 crores, that of Bank of India, Union Bank and Bank of Baroda at 1,200 crores. And for the total PSU pack, they're expecting to see a potential treasury loss of close to 25,000 crores. Third quarter numbers were also weak, so fourth are also expected to be weaker. But when it comes to private banks, you have Jefferies, which is mainly betting on the corporate-oriented private banks, and also some of the retail-oriented banks, which have a strong retail liability. So Yes Bank, Axis Bank and ICICI Bank, they say their share prices have come up sharply in the last 2 months, and so they see that as a strong opportunity to enter, because they believe that the corporate sector is looking up. So stress cases are largely recognized, NII growth is picking up. They're also seeing a strong recovery as far as the operating profits are concerned, and on the other hand, valuations don't look as demanding as in case of retail-oriented banks. So Yes Bank, Axis Bank, ICICI Bank are their top corporate private banking picks, as well as HDFC, which is a perennial preferred choice for them. And they also believe that the street is actually not pricing in some of the recovery in earnings that is likely to come, because they're just focusing on near-term asset quality issues. So these are the stocks that they like, but they're very clear that they would stay away from PSU banks. So both these brokerages saying that the fall in PSU bank shares is not really attractive and they would rather avoid it. As far as the picture is concerned for NBFCs, and this is a Morgan Stanley view, they believe that the market borrowing rates will continue to remain higher, which will work against NBFCs and work in favor of banks, and hence they will like NBFCs only which operate in the typical non-bank segments. So they would avoid NBFCs which are present in the housing finance segment where the competition with banks is really high. They're expecting most NBFCs to derate over the last 1 year because the rising rates will add to the negative sentiment. But they like Mahindra Finance, Shriram Transport Finance, Bajaj Finance and Edelweiss, all which have been rated as overweight. On the other hand, they have downgraded Indiabulls Housing Finance and Aditya Birla to underweight. They've also trimmed the target prices for LIC Housing Finance, Shriram, City Union, Bajaj Finance, Mahindra Finance and Edelweiss. But largely, even when it comes to their pecking order, their preference for NBFCs comes much below private and private corporate banks.
Well, interesting, and how different brokerages have mildly different views from each other. Shraddha, thanks for putting that into perspective. This is the latest, and remember, every brokerage note will have one or two standout points as well. But this is the latest that we're getting you from Credit Suisse and the Morgan Stanley stables on banks, both private and PSUs, and NBFCs as well. Now, I just thought we're very close to levels that we haven't visited in 2018, or we are at levels which we haven't visited in 2018. It's a good time to take stock of how the fall has been, what could be the plausible takeaways from the last 2.5 months of trade that we've seen in 2018. The first chart, I've borrowed it from a Morgan Stanley note which came out on February 26th or February 28th, either of the 2 days. Excuse me for not remembering that. But the Morgan Stanley note says that rich valuations in the broader markets could well lead to corrections, if at all, that come in at the broader end of the spectrum. So the two charts out here, the gray one is the market cap to GDP ex Sensex, and the blue chart is the market cap to GDP including the Sensex, and you can see the difference in valuations, wherein the broader market valuations, according to Morgan Stanley, a lot steeper than the benchmark index valuations. I mean, frankly, everybody's on the same page, and they highlight the factor that the main markets or the mother markets may not necessarily be as expensive as we make it out to be. Moving on to what's happened in the fall thereof, and you will see that the broader market fall has been more pronounced than the large cap fall. This is the returns from the start of year, that is 2018 returns. And while we did go up a bit in the first few days, from there on, from this point onwards, which is about Jan 15, when the corrections almost started at the broader end of the spectrum, year to date, we've lost about 9% and 8% respectively in the mid cap and the small cap pockets. Compare that with what's happened to the Nifty, which is the white line, 2.5% YTD move on the downside, and the Nifty Bank, which is being touted as the culprit for the fall, 4.5%. These guys have corrected almost 3x compared to the Nifty and 2x compared to the Nifty Bank. So the broader market fall has already happened. Not to say that this is the end of it, but what everybody's been talking about, that the broader market valuations were very rich. We're already seeing evidence of that in the difference in the falls that's happened between the large caps and the mid caps. Now, I know we've been talking about how the indices or the Indian indices have fallen a lot more than some of the global indices. Just thought would put that into perspective as well. These are 5 markets. Mind you, I haven't chosen some markets which have corrected more than India too, but these are the 5 markets YTD, and ignore the Bovespa. That's really had a big move, and we all know the reasons, so I won't get into that. So the Bovespa has had a brilliant run, YTD, that's about 9.5%. But then look at this cluster. And in the cluster, it's evident that there are a clutch of markets which have had a move anywhere between 1.5% on the upside to about a couple of percentage points on the downside. So the Nifty is not alone out here. Almost all the markets, emerging markets, Straits Times, Shanghai, Nifty, a couple of other markets too have fallen. Kospi, for example, has had a fall which is steeper than what the Nifty has been. So while we may say that that Indian markets are not in sync with what the global markets are doing and we are falling a lot more, that need not necessarily be the case. It's a matter of 2-3 percentage points here and there, and it could happen to almost any market. So don't get too perturbed. There is a fall, yes, but it's happening across the markets. I was just looking at 2 or 3 notes that came out very, very recently, 2 or 3 thought points that came out from a bunch of people. And the absolute return letter spoke about made 2 or 3 mentions to why this could be happening. Now, there is a fear of a serious bout of inflation in the US. This is for the US markets, keep that in mind. And a lot of people questioning whether the Fed is really behind the curve. There have been equal number of people, I think Ray Dalio mentioned this as well, that the Fed will be surprised with the quantum of rates that they will have to make. So a bunch of people who believe that the Fed is behind the curve. And if all of this is happening and impacting US markets, comes that famous saying that correlations go to 1 before you can count to 10. And never mind how much we would want to say that, you know, the US has problems of its own and the others may not have so. I think when the mother market falls, almost every other market tends to react, and India and the other emerging markets would not be any different. The valuations are still not bad, but just highlights the point that the mother market is correcting. We will correct. Last but not the least, what Shraddha was mentioning and what we all know, the recent correction and the kind of fall that it has brought to some of the banking names. I just scanned as to what the returns from 29 Jan, from where the fall started, have been. And the losers list is peppered with rate sensitives. You look at the MRR function on the Bloomberg terminal, and it's filled with banks, corporate-facing banks, select auto names. It has the Axis banks, the ICICI banks, the SBIs of the world, certain auto names as well. So it's all about what's happening to the rate sensitives. This is year to date really, and that will show Bharti Airtel, Tata Motors and the others too. But if you had looked at from, Giant 29, the clutch of names out there in the banking space, which are a part of this losers list. State Bank of India, there is ICICI Bank, there is Axis Bank amongst that list as well. So no surprise here that banks are at the center of action. But remember, the broader markets have already corrected 8-9% and much more than what the large caps have seen. But if these are the pain points, could Q4 be a good time for one pocket? Well, maybe. All marketing companies have these 3 factors working for them: rising marketing margins, stable refining margins, and higher crude prices. Remember, the stocks were active yesterday. Sumit's drawn up some charts to show why is it that the Q4 may turn out to be a good quarter. Sumit, good morning.
Good morning, Udit. So mainly it will be because of the rising gross marketing margins. You can clearly see in this chart in the last quarter, that is the Q3 of financial year 2018, how the gross marketing margins were falling. Right from October, it came down to its lowest point in December, when the gross marketing margin earned on sale of every litre of petrol and diesel fell to around 1.2 rupees per litre and 1.3 rupees per litre. But now in this quarter, that is the Q4, that is from Jan, Feb and so far as of now in March, the gross marketing margin earned on sale of every litre of petrol and diesel has been rising. In Jan, it rose to around 2.5 and 2.6 rupees per litre, and now in March it's at 9-month high. Now, it is at around 3.3 rupees per litre and 3.6. That was the level that we saw in the last July 2017. Now, this rise in marketing margin could largely be attributable to the recent fall in the crude prices, but the surge in the retail and retail fuel prices. As you can see here, in the Q4 of financial year 2018, year to date, Brent crude has fallen around 2%, while your retail petrol and diesel prices have increased by 4% and 6%. Now, this compared to the last quarter, where the Brent crude has increased 16%, but your petrol and diesel prices were largely unchanged. So this change now in the Q4 is giving the oil marketing companies a bit more room to increase their gross marketing margins, which will also cover up for the losses that the companies did in the last quarter. So this fall in Brent crude prices versus the rise in retail petrol and diesel prices is leading to an increase in the gross marketing margins of the oil marketing companies. Now, if you see, though Brent crude has come off a bit from its recent high, but compared to the last quarter, the average Brent crude prices are still higher. Now, in the Q4, that is year to date, the Brent crude is averaged around $67.24 per barrel versus $61.4 per barrel reported by the Brent crude that averaged in the last quarter. Now, if you see, generally when the Brent crude is on an average higher compared to the last quarter, the oil marketing companies have reported an inventory gain. You can see in the Q1 of financial year 2018, when the Brent crude fell by around 7% compared to the last quarter, the 3 oil marketing companies, that is Indian Oil Corporation, Bharat Petroleum and HPCL, reported an cumulative inventory loss of close to 6,200 crore rupees. In the second quarter, when it increased to $52.1 per barrel, they reported an inventory gain of close to 2,500 crore. And similarly, in the last quarter, when the Brent crude averaged at around $61.4 per barrel, they reported an inventory gain of more than 9,000 crore rupees. Now, in this quarter so far, the Brent crude has averaged at around $67.2 per barrel. So we can expect an inventory gain from the oil marketing companies. Lastly, the gross refining margin, now that has been stable at $6.9 per barrel. Now this is a bit off compared to the last quarter where it was around $7.2 per barrel. But if you see the month-wise data, it has been on an increasing trend. In January, it came at around $6.2 per barrel. In February, it was around $7.5 per barrel. And so far in the month of March, it has averaged around $7.9 per barrel. Now, a higher gross refining margin means that the oil marketing has been earning more on every barrel of oil that it has been processing. So these are the three factors that are working in favor of the oil marketing companies in the fourth quarter so far in the financial year 2018.
Could there be a risk to these come Karnataka elections, Sumit?
Yeah, we have seen in the past trends, whenever there have been state elections, the rise in retail fuel and petrol prices have not been that rising. So maybe there could be a risk in the upcoming elections also.
But by then, the quarter four would have been over. So
quarter four would have been over.
Q1
Q1 could be a risk that we can see. Likely we saw in the last quarter, that was in the Q3, where all the oil marketing companies also saw a fall in their marketing EBITDA compared to the last quarter because of the restricted rise in retail fuel and prices.
Well, interesting analysis there, and maybe one reason why the OMC stood out in trade yesterday.
Yeah.
Sumit, thanks for putting that into perspective. I much appreciate that. Well, so that's the sum and substance of the things that we've noticed today. One piece of news as well. Market regulator SEBI has ordered Tata Motors to conduct an internal probe into the alleged leak of its financial earnings on instant messaging platform WhatsApp. This is the third company that SEBI is pulling up for an alleged leak. Sajit Mangat has this report.
As part of its ongoing probe with respect to WhatsApp leak, SEBI is looking at a clutch of nearly 12 companies, and we have already seen orders coming out against Axis Bank, HDFC Bank, and Tata Motors is the third company where SEBI has asked for an internal probe on the alleged leaks of financials for the third quarter of FY16. Remember, the results of FY16 third quarter were available on WhatsApp, and the results were very similar to what was leaked to the WhatsApp with respect to turnover, EBITDA, margin, profit before tax, profit after tax, and insurance claim. Something which is very intriguing for SEBI. SEBI hasn't pinpointed where the entire fault lies, but it has asked the Tata Motors management to bring in systems and processes and also clarify who are the people who will be in charge or who will be responsible for keeping the secrecy of these numbers till these are disclosed, approved by the board and disclosed to the stock exchanges. So this is the ongoing thing. What SEBI has asked them is to come out with a probe within, do the entire inquiry within 3 months, and within completion of the inquiry, the entire thing should be submitted to SEBI within 7 days. So this would be something which will be watched out for, and as we see, it's getting more and more murkier because while Axis Bank was related to 2017 and 16-17, SEBI has gone as far as December 2015 for Tata Motors. So it's going to be interesting to see which are the other companies where SEBI will come out with a similar order of asking for inquiry as well as some explanation from these companies.
Well, thanks for that, Sajit. Well, that's all that we have on First Word for the day today, but lots more lined up on the show. We discussed the factors weighing in on the market's mind with Andrew Holland of Avendus Capital. All strategies, discuss India's economic outlook for the coming financial year on the basis of the report that CRISIL has come out with DK Joshi of CRISIL, and maybe touch base with a couple of construction companies. But all that's coming up after this break. A full tilt towards the day's trade immediately coming up after this break. Stay tuned.
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार, just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge, साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're still watching Indian Open with us on Bloomberg Quinn. Let's quickly do a check of the Asian markets, which are trading with a mixed note after the news came in that Gary Cohn, who was the chief economic advisor to the White House, has resigned over tariff issues. You've got the Japanese markets, which are trading in the red right now, down almost 0.2%, and Hang Seng too has turned negative as we speak. Some bit of positive trends seen there for Shanghai, which is trading with gains of nearly 10 points. And SGX Nifty today is suggesting a flat to negative start, so to say. But I guess SGX Nifty too has recovered from the lows which were seen at one point of time. So 10 to 26. Remember, yesterday was a day when we saw major sell-off coming in our markets. What sort of trends then are we getting from the futures and options market? Let's go across to Darshan Mehta to find the same. Darshan, the base for the market is, going lower now. I was just checking the OI concentration. Now it's between 10,000 to 10,500.
Yeah, that is there, but a significant amount of call writing had happened yesterday. Now, on the Nifty itself, yes, fresh short positions were taken. We are below the 10,250 mark in trade. That was an important level that, traders were waiting for yesterday. So close below that is something that is being watched about. Actually, the point was 10,249. So it's just managed to close at that level. So it's important. Even on the bank Nifty front, the open interest build-up was much higher, 8%, and fresh short positions were seen. Now, if you take a look at the open interest concentration, you can see that, the Nifty is near here. It is between 10,200 and 10,300. So call writers anyway are writing at 10,300, 10,400 and 10,500. This is where the support, where resistance for the market is. But still, put writers are active at 10,300 and 10,400. So if the market manages to move down even lower,
positions at 10,300 and 10,400, these put writers will have to shed positions at a very alarming pace, which will cause the markets to even go down further. Now look at what happened yesterday in terms of open interest build-up. Put writers across the board from 10,300 right up to higher levels were shedding positions in open interest. Call writers became extremely aggressive at 10,300 because that seems to be now the resistance for the market as of now. But there was a little bit of writing that came in on from the put side at 10,200. So if 10,200 is broken and the market manages to stay lower, positions at 10,300 and 10,400 will be forced to close down. So the FNO chart is indicating it's the market that, you know, the bears are dominating and will continue to dominate. Now look at the PCR also. That also fell in from 1.22 to 1.14 on the Nifty side, indicating that put writers have no power in the market, even on the bank Nifty front. So it's basically everything is pointing to a very bearish scenario at this point of time. Now if you're looking at the stocks in the FNO band, Fortis, HDIL continue to remain there. There is IDBI and OBC that continue to remain in the FNO band. The new entrant is Deven Housing Finance, which saw fresh short positions being built yesterday. Some of the stocks that I'll watch out for: United Spirits yesterday fell in significantly on high open interest build-up of 15%. Again, a Morgan Stanley target price cut has come in. Something's definitely bothering Piramal Enterprises. There's no news as such, but open interest, second day in a row on high open interest, the counter has been down in trade. The other stocks is, you know, the PSU banks, Canara Bank, Bank of India, already trading at record lows, and again fresh short positions are being seen on the counter. You have NIT Tech after days of rallying, again long unwinding was seen on the counter. Open interest was down 14%, and Adani Enterprises will be interesting to watch. It fell sharply, but the open interest build-up was very low because it happened in the last half an hour of trade. With the issues of what Subramaniam Swamy is raising, probably this counter again will be in focus today. But the general trend setup that we're seeing, it seems like it's a bearish move. The SGX Nifty is not indicating much of a gap down, but you never know. Yesterday also, we are seeing that selling usually comes in the second half of trade.
Yeah, well, that's interesting. Thanks a lot for putting all of that into perspective, Darshan. And, you know, quite frankly, just the nature of the trade yesterday, one wouldn't have thought that we would see a fall this sharp, but just got accentuated in the last, 1 hour of trade led by the Nifty Bank.
Yeah, Neeraj, I think this is what we were discussing yesterday with a couple of our guests from the Countdown show as well. Now, I think it's more of domestic issues which are bothering the markets, because the Indian markets have been underperforming the global markets. I know today Asian markets are definitely trading on a mixed note, but Dow futures could be down, and those are issues related to tariffs. We don't know whether that will be imposed or not yet, but definitely, I guess now there's a fear that there could be trade war which could come about when it comes to, you know, between the countries. US, I guess yesterday also EU came out with certain products where they would be imposing some import tariff. Yeah,
and you know, so optically it does seem right that we've underperforming the global markets in a big way, maybe the last couple of weeks. But which is what I was saying in my earlier piece today, and if we can bring up that chart, the YTD performance of almost all the markets, save for Brazil, which has had an exceptional performance, it's up about 10%, that's an outlier, so ignore that. Almost all the other markets are wedged in this +2% to -2, 2.5% kind of a range. There you see that whole cluster of markets, which includes Straits Times, China, the Dow, this is the Nifty, and I haven't taken KOSPI, which has actually underperformed even more. That's gone down even more. So it's a completely valid point that the last 2 or 3 weeks we've fallen when a lot of other markets haven't. But if you look at the YTD performance, it's a cluster wherein almost all the markets are wedged as well. And probably if the mother market is showing these signs of correction, there's no way that other markets can escape. And then, Shah, I think we'll have to take cues how the money moves now, considering there's so much of concern with regard to the rate hikes which could come in US. And in fact, if that actually happens, 4 rate hikes, money usually tends to move towards a developed economy, because that's where especially the hedge funds would like to park their money in a safer market. But let's bring in our fundamental guest on the show. Gaurang Shah, Head Investment Strategist at Geojit Financial Services, joins us on the show now. Hi Gaurang, good morning to you. Well, yesterday was a day when we breached all the crucial levels in Bank Nifty as well as Nifty. What are you making of the fall that we are seeing? Neeraj and I were discussing that the Indian markets in the recent past have been underperforming the global markets. What reasons would you assign to that?
Morning, Navneet. Not surprising. We were of the opinion, and even in our earlier conversation, I was discussing with your team the range is closely somewhere around 10,200, 300 on the lower side on the Nifty spot, 10,500 and 10,800 on the higher side. And this March is not going to be like the earlier March months that we've seen. We have the long-term capital gain tax window up to 31st of March. And if you want to book out and don't want to pay 10%, you have to sell your long-term investments by 25th so that you can get your proceeds, and that would possibly keep the markets under check, and that's what exactly we've seen. Every rise about 10,500, 10,600 has met with selling pressure. And I think that this selling pressure might just accelerate a little bit as we go towards the financial year end. Having said that, I don't think that a lot is lost in terms of whatever small correction we have seen from the higher levels that we were at on the Sensex and Nifty. And possibly you might see some more, unwinding of long positions from long-term investors before the financial year end. We identify this as opportunity.
Gaurang, if I can just come in. For a bunch of stocks, good morning of course, a bunch of stocks, they would be below the Jan 31st levels. Why would a long-term investor want to book out right now?
If you look at a long-term investment, that's what Neeraj, some of the investments which even I speak to our clients, they are in money 60, 70, 80%. So, I mean, it's not surprising that you want to, from 31st of March, you have seen the Sensex and Nifty also come down considerably. But if you're invested for the last 3, 4, 5 years, you are making some handsome returns. And I'm only talking about all those investors long-term who don't want to get into this 10% tax cut. And according to my conversation with a lot of retail clients, most of them want to book out and say we will have a relook at it on 1st April 2018. So, I mean, yes, your numbers are down from 31st of March, so is Sensex, but still you are in money. That's what I'm trying to say. And my belief is that, whatever small correction you've seen, I think you should look at companies large cap, mid cap, primarily with earning visibility, and that's what exactly what we are following in terms of sectoral picks.
Okay. Well, a clutch of other stocks in news as well. Gaurang, just stay on for a moment. That's the broad market thesis from Gaurang Shah. Lots of stocks to react to. Let's get in our research team members who will join us and tell us about all the key newsmakers in the session today. Some very interesting brokerage notes, a couple of which we've already discussed. I think I'm very interested in that Morgan Stanley note, or I think it's the Morgan Stanley note, or on United Spirits as well. So much to talk about with all of our research team members. Thanks for joining in. Shraddha, I'm guessing you're starting off with the stocks in news, so let's come to you first.
Yeah, so the buzz in the road construction companies continues like we were talking yesterday. So Dilip Bilkon has won a 917 crore highway project in Jharkhand. Ashoka Bilkon has been declared as the lowest bidder for 3 road contracts worth about 3,000 crore in Karnataka. Sadbhav Infra has also been declared L1 for a project worth 934 crores. Tata Part RBI has allowed raising the foreign investment limit in team lease services from 24% to 75%, and that in Ultratech Cement from 30% to 40%. So we could see some positive reaction there. Lumax Auto Technologies will consider stock split on March 23rd. Generally, you see a positive reaction when some stock split is announced. So those are some names that I have, and Yatin has more.
Yeah,
right. So many stocks that we are splitting it up to. Yeah. Interesting.
Yeah. So, a couple of bulk deals which happen in Gayatri projects, important one to note, because we have a lot of FI action. In fact, we have the GMO completion master fund portfolio which bought nearly 12 lakh shares in Gayatri projects at a price of 209 rupees per piece. If you look at Mentor Capital, they were the sellers, the counterparty, they sold almost 48 lakh shares. And also we have Forstar AP, which is again probably in FII, which bought 11 lakh shares at a price of 209. So a couple of FII to FII block deals happened in the counter. Apart from that, watch out for Tamil Nadu newsprint and this PSU, which is into the paper and hardboard making, will meet several fund houses including Sundaram Mutual Fund, Avendus Wealth Management on March 7th, which is today. So watch out for this one. They have been doing well. Recently, they have increased the product prices. So there could be some action there. And in the insider trades, watch out for Apollo Tyres. And for a very long time, we have the promoters buying from the open market. And recently, from a period of 27th February to 5th March, the promoters have altogether brought nearly 17 lakh shares from the open market. So Apollo Tyres will be surely in focus, Neeraj, after the promoter buying has been there for the last couple of months.
Yeah, consistent buying on sporadic days. We'll watch out for this one as well. Thanks for that, Yatin. Sumit?
So there was a Financial Express report which says that Cabinet is likely to take up relaxation of spectrum holding. Now, if this goes through, it will be a big boost for the Vodafone Idea merger, because according to the current merger and acquisition guidelines, a combined entity cannot hold more than 50% of the spectrum in each band individually and should have less than 25% of the airwaves allocated to all the operators across all bands and circles. So what is going to change is this 25% overall spectrum band is going to increase to 35%, and the 50% band-wise spectrum cap is they're expected to scrap that thing. Instead of that, they'll bring in a band-wise cap of only on 700, 800, 900 megahertz band, and that will be around 50%, but that is not to worry because none of the operators have any excess spectrum there. Now for Vodafone and Idea, they have a total of around 1100 megahertz of spectrum, but they have excess spectrum in 900 megahertz band in 5 circles, that is Maharashtra, Gujarat, Kerala, Haryana and Uttar Pradesh West. And when it comes to the 2500 megahertz band, they have excess spectrum in 2 circles. Now the value of these circles or value of this spectrum is close to 5,000 to 7,000 crore rupees. Now they won't be getting this money, but if this rule doesn't go through, they'll have to either submit this spectrum back to the government or sell this spectrum in the market, which is less likely to happen. So this is not a financial benefit, but definitely a sentimental boost for the merger.
Okay, we'll watch out for when these norms come about. Sumit, thanks for putting that into perspective. And brokerage notes, I know we'll talk about United Spirits a bit later on, but Kotak is an interesting note on Z.
Absolutely, and Kotak has interviewed Z Entertainment's MD and CEO Mr. Puneet Goenka on its digital strategy and Z5, that is their new OTT app outlook. So according to the note, Z5 aspires to be a key OTT platform for Indian language entertainment content going ahead, and what differentiates Z5 is its vast library in the form of 3,500 plus movies, volume of content, premiere movies as well as original shows that will hook investors in Z5 particularly, and they plan to launch one new original show in 6 different languages every month. And they believe that their biggest innovation in technology is the voice search, which will enable investors to discover search content seamlessly. Elsewhere, management remains confident of monetizing ad-based viewership, and they hope to shift viewers to subscription-based video-on-demand platform model in the course of operations. They also look to expand consumer reach by tying up with telecom companies, as most of the digital consumption in India is driven by mobile-driven data content. And in terms of international expansion, Z5 has already launched Z5 app in Middle East, and they look to launch operations in European markets in this particular year. And lastly, margin in FY19 after factoring investments in the digital space, Neeraj.
Well, we'll watch out for all of these. Thanks a lot, all 4 of you, for joining and giving us those perspectives. Gaurang, maybe talk about the road construction companies. The order inflows continue in a thick vein. We'll be speaking to KNR a bit later on as well in the day today. But any construction company that you like, and why that one compared to the rest?
Well, there are at least, I think, close to about 5 to 6 companies that we have our positive coverage on, including the one that you mentioned, KNR Constructions. And the third quarter gone by, Neeraj, for KNR Constructions was a stellar set of numbers in terms of all the parameters that we evaluate companies for long-term investment. So other than KNR Constructions, we have PNC Infra, we have NBCC, we have NCC, Capacity Infra, L&T. These are the names that even something like Ashoka Buildcon, Dilip Buildcon, which your colleagues were just speaking about, Dilip Buildcon or Ashoka Buildcon getting some orders from up north. And our sense is, Neeraj, that this is just a humble beginning. 85,000 kilometers of road under Bharatmala Pariyojana. and the Sagarmala Pariyojana in terms of connectivity through waterways. I think these would help companies associated with this sector, whether it is related to port construction, infrastructure construction, or roadways, highways, expressways. And our sense is that you should look at companies in this space which have low debt or zero debt. Execution capacity is absolutely in place. And you know, we always talk about order book, Neeraj, but what use is that order book if the companies are not able to execute? So you should look at the execution run rate as well to improve the earnings. And all these 4 or 5 companies that I've spoken about, I think they stand very, very tall in terms of the parameters that we have set aside. And I think earnings will definitely improve on fallback of new order intake as well as execution of the same.
Well, we'll be watching out for all these companies when the markets open today on back of that order win. All 3 of them, Dilip Bilkon, Ashoka Bilkon, as well as Sadbhav Infra. But talking about the markets, let's also bring in our technical analyst, Gaurav Bissa, who's actually a derivatives analyst at LKP Securities, who's joining us on the show now. Hi, Gaurav. Good morning, and thanks a lot for joining us today on Bloomberg Quint. Yesterday, there were fresh shots which were seen on both Nifty as well as Bank Nifty. And if I look at the FI data, Gaurav, they've been building up shots in the last 2 to 3 sessions on both index futures, as well as they've been buying a lot of puts and writing calls. How are you reading the setup, and how would you approach the market opening today?
Good morning. There are a couple of pointers, as you said, that there have been consistent short portions that have been seen getting built from the FIs, and if you look at the overall portions as well, it's not just the FIs that are building portions. Many of the HNIs have also seen getting shorts into the system. So the idea is that any rise is likely to be met with again ferocious selling, and it's not just the Nifty and the Bank Nifty. If you look at many of the sectors, many of the index stocks or non-index stocks also, they have seen significant selling happening, not just the PSU banks or one or other particular sector. Coming to the index again, there's been a lot of writing that we are seeing in 10,500, now shifted to 10,400 call option, also seeing a lot of writing happening yesterday. 10,300 sold almost about 2 million portions. So it's again pointing out that any rise is likely to be met with more resistance. 10,280, 10,300 has been acting as an immediate support for the index. It's closed below these levels. As long as we are trading below 10,300, I would not be playing for a up move. I would not talk of reversal also. I would just talk of up move. Close about 10,300, then I think there can be some amount of shortcut that we can see of 100 points, 120 points. But as long as we're trading below 10,300, it is going to be a sell and rise. We may open on a small positive note, 10, 15, 20 points up. And we might try to scale levels of 10,280. But if it is not conquered, if it's not sustained, we may again see selling happening towards the second trading session.
So, long story short, there is a likelihood of trade on the long side being light. Chandan Taparia, Associate Vice President at Motilal Oswal Securities, joins us on the show as well. Chandan, good morning to you. What would you be doing in trade? We are likely to start off on a very flat note, but the world is not a happy place. The Dow futures have been very, very volatile post the announcement of Gary Cohn stepping down as well. How would you approach trade today?
Yes, market is continuously making lower top, lower bottom formation, and every bounce back is being sold in the market. Just a couple of days back, it was finding hurdle near to 10,630. That was a 38.2% retracement. And before moving that, it was finding resistance near to 10,430. So it has decisively broken the same. Even yesterday, it closed below 10,276. So all the supports are taken out and the market is drifting lower. We have seen sharp selling in last hour of the trading session, and put call ratio has fallen down from 1.46 to 1.14 in last 4 to 5 trading session. Volatility index has jumped by around 15%. So rising volatility with falling put call ratio indicates the bearish bias of the market. In last 2 trading sessions, we have seen significant call writing at 10,400 and 10,300 strike. And because of that, I am not expecting market to surpass 10,300, 333 kind of zone. So till it remains below 10,300, 333, weakness could persist again on bounce back move, while on the downside, market has potential to retest the recent low, previous swing low of 10,200 and 10,100 zone. That is the 100 exponential moving average for the Nifty index.
In fact, the 200-day moving average stands somewhere about 10,127, which will be in focus on the downside. That is only if we opened lower or we grind lower during the session. Chandan, as you were mentioning, nothing seems to be working. The PCR is heading lower. I guess even the IVs are above their historical levels that we've seen in the recent past. Keeping in mind all those factors, because the setup is not looking that great, what would be your top trading strategies for the day?
Yes, first talking about the Nifty, as setup is showing some sign of weakness, so better to be with the protective puts. However, market has already seen the decline of 800-900 points from higher levels, but the price or the chart has turned negative on the weekly and the monthly time frame. So better to be with the protective put every time on bounce back move. As of now, buy 10,200 put stop loss of 100, and expecting this put to head towards 180 to 190. While on the trading side, I have selected one buy, one sell. And still stop loss are suggested for the same. First buy is buy on IGL. We have seen buying interest in IGL, MGL, Petronet, IOC and BPCL in last trading session even after the market decline. So somewhat the strength is visible, and IGL has managed to surpass its 50-day exponential moving average. Longs are being built. We also seen surge in the trading and the delivery volume. So recommended to go long on IGL with a stop loss of 302 and looking for an upside target was 325. Second trade that is on the sell side on the SDFC Limited. We have seen the negative structure. It has fallen below its rising support trend line. Also still below 50-day exponential moving average. Witness call writing at higher strike. So recommending to sell with a stop loss of 1808 and looking for a downside target towards 1740 levels.
Gaurav, what about you? You too have one long and one short call for the day.
Well, the rationale behind having a more balanced approach, the reason, as Chandan mentioned, we have already seen a 700-800 points cut coming in a matter of a month or so, and yesterday we saw 100-point fall. Day before it was 30 points. So 150-point fall we have already seen in a matter of 2 days. There can be a small bounce back that can be seen, and in that particular bounce back we can see our stop losses getting triggered. So it is always prudent to have a more balanced approach. And among the short recommendations, that would be on HPCL. We had recommended to our clients yesterday for a bias on bullish side. We were hoping for a bounce. It did manage to give a bounce, but yesterday toward the end of trading session, the closing was quite negative. We have seen some around 2 or 3% short positions getting built yesterday. It's trading just at the crucial support levels of 365, 364. I would have a conditional sell wherein I would recommend a sell below 364 HPCL futures with a stop loss of 360, and on the downside minimum targets of 355 can be seen. And we have seen that the kind of breakdown it can see, it can fall even much more from the current prices, but a 2-day target can be around 355. Another recommendation would be on Hero Motor. Some amount of short covering was seen yesterday. It has been bouncing from 3,500 mark quite rigorously, and it's more of a preemptive move. It can be a good trade about 3,600. That would give it a lot of stability to the name. But even in the current prices with a stop loss of 3,110, one can buy for targets of 3,650 to 3,700.
Okay. On to our special segment, Bloomberg Edge, wherein Jayesh Khilani tells us about a pattern that the Bloomberg terminal has thrown up. Jayesh, what's the stock on the radar today?
So Neeraj, I'm watching out for the index itself. That is because the volatility, the 30-day volatility on the India VIX index, that has surged to near 2016 high. Let's first address the chart that we have on the screen. The first panel, the blue line shows you the volatility index, the 30-day volatility of the index itself, and the second panel shows you the India VIX, which measures the volatility. What is important over here is that currently it's at about 118%. And the VIX is nearly, at about more than 15, more than 16 as of now. And in 2016, what happened was it topped out at 120%. And what exactly happened with the India VIX is it surged from about 16 levels, and it surged 45% from those levels. And the market thereafter fell about 9% after, this move had happened. So this is an early indicator of volatile times ahead. Now let's have a look at what the numbers were in 2016 and where we stand currently. If we can go to those numbers, the graphic will show you that in 2016 the 30-day volatility was at about 120%, and currently also we are at about 118%. The VIX actually rallied 45% in 2016, and in 2018 so far, from the low of February, we have seen a surge of about 19 to 20%, and the Nifty also, in 2016 fell as much as 9% post this move.
Thanks a lot, Jayesh, for bringing those details. In fact, volatility is something which all of us have been talking about. If 2017 was a good year for global equities, that the reason was the volatility was on the lower side, and now we've seen the VIX not only in India but even the CBOE VIX in US has been inching higher. But going back to our conversation with Gaurang, Gaurang, I remember you've been bearish in the PSU banking space, and now there are a couple of reports which have come in which suggest that the Q4 Treasury income could be lower because of the yields going up. Well, that's one factor I'm sure the market would have already factored in, considering the prices of the bond have corrected. But keeping in mind that the yields are rising, what should be the approach now towards the NBFC space, which has outperformed at least in the last 1 year?
So, Navneet, as a brokerage house, we remain positive on 3 public sector banks: State Bank of India, Bank of Baroda and Indian Bank. Yes, the Q4 numbers are going to be disaster, not only because of the yields issue, but also because of the provisioning, all the related, scams that are coming out and so on and so forth. In the NBFC side, the question that you asked, we remain extremely positive on the housing finance companies. Then moving down, we remain positive on diversified financial companies, and the third category would be microfinance companies. They have been outperforming, and my sense is that this run rate will continue. And our belief now is that the demand from semi-urban and rural India, as far as the loan book growth is concerned, I think that's going to be tremendously supportive, with a positive tailwind of Tier 2, Tier 3 cities and metros given. Housing finance companies primarily because of the asset quality, and of course the likely possibility of growth in terms of loan disbursement and a conducive environment for the end user to actually go and buy a house because of the prices correcting down south. So I think you need to concentrate on companies which are well managed and of course have ease of generating or garnering funds at lower rate so that their margins are kept in.
Very interesting. A set of stocks which came off quite rapidly yesterday were the alcohol, the liquor stocks. Now, there's a very interesting note and what GST could do to this set of companies in the liquor space. Mind you, yesterday United Spirits and a clutch of other names came off quite rapidly, as would know. And Morgan Stanley's come out with a note wherein they say that the risk of GST being levied on extra neutral alcohol has re-emerged, and United Spirits may trend lower amidst this ongoing debate. First, trade perspective out here on United Spirits. Gaurav, Bissa, 5% correction yesterday. Is there more for United Spirits?
Well, the kind of data that we have seen at higher levels, we are seeing good amount of short positions getting built. It has been reaching crucial support levels quite firmly. The immediate support would be around 2970, 2960. That would be the level I would be watching out for. Any fresh trades on the short side, I would be advising only below 2970 levels. That would be more of a safer bet, and we can see a good amount of pressure then coming in the name. It can head towards levels of somewhere around 2670, 2650. Almost 4% fall from the high levels of from levels of 2970 can be seen. And as long as it's trading about 3000 levels, I would not be too keen having shorts. There can be a small relief rally that we can see in the name, but below 2970, the pressure is likely to mount. We can see some aggressive shorts also seen getting built on these names. So I would be selling a little bit lower levels.
Gaurang, what would you do here? It's a pocket that's supposedly going to have tremendous revenue sales growth over the course of the next 5 years, but we've seen this increasing set of states hiking their excise duties and this threat of GST now as well on ENA. What do you do here?
So I think firstly on the GST front, Neeraj, we will see further changes coming through unless and until we have a definite structure in place in terms of all the goods and services falling into the respective bracket and the comfort derived both at the center and the state. The sector outlook, well, I'll speak on the sector, Neeraj, because we don't have any specific coverage on any of the companies. So on the sector outlook, let's face it, the consumption is quite robust. Because of the, levies, you might end up, consuming less, but it's not that you're not going to consume at all. And my belief is that as we go forward, I think you are going to have that consumption theme even escalate to a higher level. Prudent to stay with companies which have got product in all price categories and different product put together. But yes, short to medium term, because of these changes, the sector might go through some kind of pressure and underperformance. But you mentioned about 3, 4, 5 years, and I mentioned the same thing, that the consumption is quite robust.
Okay, Gaurang, stay on, 25 seconds to go, and the pre-open rates now don't seem to be too encouraging.
No, Neeraj. In fact, SGX Nifty was suggesting a flat start for our markets, and the pre-opening rates will just come up on your screen. And let's see if there is any more sell-off which will come about. Okay, so that's the first rate which will come up. That's SGX Nifty, which is still suggesting a downtick of nearly 20 points for our markets. 10,267. Okay, so that's a flat opening which the pre-opening rates are suggesting, and Sensex showing about an uptick of 100 points. Remember, these rates will settle down in the next 7 to 8 minutes, so the final rate you will get it around 908. So watch out for those levels. 33 higher for Nifty right now. Just few stocks I want to pull up. ICICI Bank and State Bank of India. Remember, yesterday in the second half of the session, these two stocks, which are the heavyweights, led the index lower. So once again, the banking space will be in focus in today's session. Once again, ICICI Bank is suggesting a downtick of nearly 3 to 5%. Okay, these rates are pretty volatile. Don't go by them. They'll settle down. SBI, let's just pull up that. If that is also suggesting a negative start for today, SBI is showing a downtick of nearly 0.5%. And pull up Sun Pharma, that was the top loser in the index yesterday, despite of that hello news which came about. The three observations were only procedural in nature, and there was no data integrity issue, though the news was positive. But looks like there was some selling which came about for this counter in the second half. Sun Pharma is showing a flat opening, and the oil marketing companies which were in focus yesterday, which were bucking the trend, BPCL, one of the top gainers, that's also showing a negative start. And index right now up almost 30 points as we speak, Neeraj.
Looking all over the place. Let the rates settle down a bit, and then we will know. We should pull up what United Spirits, Radico Khaitan, amongst other companies are doing in the session. Axis Bank is an interesting one to watch out for as well in the session today. They've spoken about some exposure, a 200 crore exposure, I think, is what they mentioned to the Nirav Modi fraud case as well. That stock is unchanged as of now, and the Adani Group stocks would be interesting as well. They've come out with some clarifications as the Adani Group about the quantum of PSU Bank exposure that they have. But yesterday, these stocks were taken to the cleaners, to be honest. The currency, 64.88, so a slightly better opening than what it opened yesterday, about 8 paise higher than what we were in trade yesterday. Okay, Gaurang, Shah, before we thank you, one quick word on Adani Ports. That's that more stable name from the Adani trio, though Adani caught it, though I must say Adani Transmission has had a fairly decent run too. But all of these stocks came down post that whole tweet from Subramanian Swamy and later on with the market volatility. What do you do with this one? It's a Nifty 50 name.
Well, unfortunately, we do not cover Adani Group, so can't comment on that. But in this likewise category, if I have to identify one company, then Gateway Distriparks is something that we have a positive coverage on.
Okay, and that's something I think Gaurang Shah has spoken about pretty strongly in the past as well, if I do remember. So that point is well taken. But Gaurav, thanks so much for joining us today and giving us your thoughts. Always appreciate your time. That's Gaurang Shah of Geojit with his thoughts. Well, 9:02, let's get in Somit Sarkar with the top brokerage calls of the morning. Somit, we already heard Saloni speak about the Kotak report on Z. What else stands out?
So the big brokerage calls for the day, first we have is Morgan Stanley on United Spirits. Now the brokerage has maintained its equal weight rating on the stock but has cut the target price to 3,250 from 4,000 rupees. Now the brokerage is saying that the risk of GST being imposed on extra neutral alcohol has re-emerged, and according to the brokerage, the stock of United Spirits may trend lower amid this ongoing debate. Now however, though the brokerage is expecting that ENA will be exempt from GST, but it says that an imposition of 18% GST on extra neutral alcohol could have a 15% impact on the earnings of United Spirits, because the company will not be able to pass on the higher input cost to the consumers. Lastly, it says that the risk reward is now less favorable when it comes to United Spirits because of low visibility of incremental pricing growth for United Spirits. Second we have is Bank of America Merrill Lynch on Titan. Now the brokerage has maintained its buy rating on the stock and has raised the target price to 920 from 770. Now according to the brokerage, banking scam may speed up consolidation in the jewelry industry. It says that tighter credit norms will further lead to consolidation in the sector. Now amid this recent news item, Titan will be the key beneficiary on the back of its strong brand presence, national presence, debt-free balance sheet and robust corporate governance. Lastly, it says that Titan could gain approximately 14% of the organized market share on the back of the recent news development that have happened.
Well, Titan gained from Demon as well, and let's see whether from this fraud case it gains more market share or not. Swami, thanks a lot for joining us and taking us through those important brokerage notes for the day. But let's just pull up the rates once again, the pre-opening rates. Nifty was suggesting just a flat start, the pre-opening rates which we got a while back. So now it's 10,225 for Nifty, down 23 points. Sensex down just about a flat opening is what is being suggested. But let's bring in our next guest for today, Deven Choksey of KRChoksey, who's joining us on the show now. Hi Deven, good morning. Thanks a lot for joining us today on Bloomberg Quint. What have you made of the recent fall that we've seen in the markets, and how are you approaching the markets right now? Would you go and bottom fish in a market like this, or will you wait more?
Good morning. Well, I think yesterday's fall was probably, if I look at how the FIs have operated and how the DIs operated in yesterday's market, I think on the whole the FIs have remained buyers and the DIs have been sellers, and I think the position have been more or less equal. On the other side, if you look at, and this is my sense, I think maybe data will validate it, after the expiry of the contract last month, in the new month, the open interest position in this particular month has been added. How do you interpret this particular subject? My strong sense is saying that I think some part of the positions which are there in the Singapore Nifty is now getting shifted into the Indian market, which was up till now staying outside the market. That is the first thinking that I'm having, and that will get validated once we have more data going forward. But if the 60 lakhs worth of Nifty open interest has got added in such a short period of time, obviously nobody has shorted the Nifty at a lower levels. Certainly I think the position has got shifted from Singapore to here. And should this be the situation which I am analyzing, quite possible that I think you might see the month of March a kind of a turbulent month in which a lot of positions would probably get shifted out from there to here, and I think we might see a large open interest position getting built up in India, which is outcome of the shifting from the other part. And that's where I think one will have to remain a little watchful, because this kind of situation is emerging for the first time in last so many years, and we'll have to actually I think take a calibrated move, analyze this data properly. As of now, I don't see any fundamental weakness in the market. On the contrary, I feel that the corporate earning growth is showing distinct amount of growth character. I also feel that the GDP numbers which have come up, I think is basically economy is getting started with a higher amount of growth going forward. So on the macro aspects, the fundamentals are remaining strong. Corporate earning is remaining strong. Though there are some of the negative news coming from the global side, I think particularly the USA getting into the trade war, I think are not some of the nicer news to hear. But at the same time, our market probably wouldn't have so much of an impact. I would think that we are relatively more stronger on the earning growth story that we are producing.
Deven, I just want to take that point forward where you mentioned that the positions are being shifted from SGX Nifty to here, and these will be the positions on Nifty futures. They can either be on the long or on the short side, and if I analyze the data, the recent trends right from February to now, the FIs actually, they've been on the right side of the trade. They've been shorting more on the index futures. In fact, the index options data also suggests that they've created more of short positions. So what's dampening the sentiment here? Not sharing the data with global exchanges, or is it LTCG, because post that also we saw some bit of correction coming by in the markets, or is it the PNB fraud case?
Well, I think it's a combination of all. LTCG definitely spoiled the mood of the market. However, if you deeply analyze the data on the LTCG side, I think LTCG is probably, as I want to call it, is a misventure of the government and the finance ministry. because on one side you already have tax. When you say that, I think India's majority of the long-term capital gain tax exemption has been claimed by the entities and not by the individuals. Those entities are any case covered under MAT. So that means that last year they have paid MAT on those particular gains that they have done if they have not paid the full tax on the LTCG. So from that perspective, accounting for 20,000 crore worth of revenue in the budget pertaining to the LTCG is going to be, according to me, I think a challenging task for the government to prove at the end of the full year. Because 20,000 crore worth of revenue coming into LTCG means 2 lakh crore worth of gain has to happen in the marketplace for the investor, and that too from 31st January 2018 prices. I guess I think it's very ambitious and aggressive target for 12 months. Probably I think we'll have to wait and see whether they will succeed. In any case, I have said the MAT has been there. So I don't think LTCG has dampened the mood. Market has analyzed this subject a little bit more in detail, and I don't think that they are worrying about LTCG. Coming to PNB fraud case, I guess I think more you dig out and more names come out, I think that is becoming very, very nervous kind of a situation. And that's where the traders may want to trade a little bit more carefully at this point of time. One of the reasons could be that I think many traders are offloading their positions currently. The third point I think which I see in the market relatively for a little nervousness is that majority of the mutual funds have been having higher amount of exposure onto the mid-cap stocks. And these mid-cap stocks are struggling on the valuation side because they are probably scaled up ahead of time as far as the valuation is concerned. To show the performance in the fund portfolio, the funds are eager to offload their mid-cap stocks. And that is where I think you are seeing momentum rise taking place in the market, offloading starts in the market. But at the same time, it would result into buying into index-based stocks because that is where the larger amount of concentration is being there from the most of the FI side also. So yes, I think you are having mix of all the factors, but if you analyze them, you don't find fundamental weakness in the market. That's my viewpoint here.
Okay, Deven, stay on. Much more to talk about, but perilously close to market open. 4 minutes away. Let's tell you all that you need to know to stay ahead in trade today. Among stocks, start off with the smaller one. GMO has bought about 1.5% in Gayatri projects. That stock remains in focus today.
Credit Suisse says they see over 20,000 crore treasury loss for PSU banks.
RBI has raised the FPI limit in Ultratech as well as Team Lease. Team Lease starts off 1.5% higher.
Infra companies like Ashoka Bilcon, Dilip Bilcon and Sadbhav Infra in focus on back of new orders declared.
Voltas, Tamil Nadu Newsprint, BSE and Subros are companies that are set to meet large investors today.
And brokerage house Morgan Stanley cuts targets for NBFCs while BofA ML raises Titan's price target to almost 920 rupees.
Well, so all of those stocks remain in focus too, but I just want to take a couple of questions from our technical experts before we hit market open. The Nifty Bank at the end of the first 8 minutes seems to be the one that is going to start off 0.5% lower. Chandan, Taparia, is there a trade on the Nifty Bank or on Axis Bank, which is now in the eye of a storm, starting off about 1.25% lower?
Yes, negative bias for both the indices and stock as well. Recently, the Bank Nifty failed to surpass the hurdle of 25,750 zone, and fresh call writing is visible at 25,000 strike. So, not expecting Bank Nifty to bounce beyond 24,800, 25,000 zone. And yesterday, it has broken the multiple support of 24,714. That was the low made in the December 2017. So, after breaking the same, Bank Nifty has potential to go towards 24,000 to 23,900 level. So, weakness could continue. Traders can buy with the put. Talking about the Axis Bank, we have STBT trade on the same. It is making lower top, lower bottom formation. We have seen some put unwinding. That's why the stock has potential to go towards 504 to 502 kind of zone. And for short position, one is to put a stop loss near to 523.
Gaurav, majority of the PSU banks are once again going to start on a negative note. You've got stocks like Bank of India, Punjab National Bank, IDBI as well as Bank of Baroda. All of them are showing negative ticks in the pre-opening rate. Any of them on the chart where you would go ahead and initiate a fresh short in today's session?
Well, Bank of Baroda for one looks interesting. Below 133, it can test levels of 127, 128 on an intraday basis. So that can be one name. A lot of these PSU banks rather are trading near the support level. So you take name any bank, whether it's Bank of India, Bank of Baroda, PNB, they are just trading at crucial levels. Even matter names like SBI, it has broken the previous crucial supports of 258. So I think if they fail to sustain the current levels, there's a good dip that can be seen on intra basis as well.
Okay. We are very close to a minute, so almost time to take in the top trading call at this hour. We'll take a detailed view from Deven Choksey on the Adani Group, on United Spirits, and maybe on Reliance Industries after market open. But just very close to market open, so let's nail it down to that one top trading idea for the day from both our trade experts. Chandan, Taparia, to you first. If you bet on one stock for the day, which one would that be?
Yeah, safe trade will be buying put of the Nifty, but stock specific, I'm recommending to sell SDFC Limited. Sell the counter with a stop loss of 1808 and expect the downside to us 1740 in just couple of trading sessions.
Okay, so Chandan sticking to his HDFC call, that's a sell which he gave. Gaurav, what about you?
I would go with HPCL. I think below 364, it can head towards 355 with relative ease. And with the kind of position we've seen getting better, it can be seen happening today or by tomorrow. So I think selling HPCL below 364 would make sense.
Okay, selling HPCL below 364, it's almost at those levels. So if it slips below those levels, then you can go out and initiate a short position there. Gentlemen, we'll just take in opening thoughts from you post-market open. Let's see, because the Nifty Bank is showing some tumultuous signs yet again. So just hang on for a bit. We'll talk about these in moments from now. We're starting off about 0.25% lower. The Nifty Bank, though the principal culprit, initial flash trade about 172 points. Let's see if this stabilizes around these levels or changes materially during the course of the next 4 or 5 minutes of trade. The mid caps and the small caps would have fallen, I would presume. Now yes, 0.5% for the mid caps, the small caps about 0.25%. But remember, they tend to be deceptive and fall a lot more in the second half of trade. By the way, the index is now down about 0.5%, but volatile. Look at the color of red. It's just a fair bit of red. Don't blame anybody out here. The mood isn't the best, therefore very difficult to see meaningful green. Some defensive trades here in the likes of TCS, HCL Tech and Infosys, but those are few and far in between. The red is slowly enveloping the larger screen, and a clutch of names right from Adani Ports, which corrected quite strongly yesterday. India Bulls Housing Finance down 3.5% yesterday. The commodity names starting to come off as well. Tata Steel and Hindalco seeing the brunt of selling. And ICICI Bank, State Bank of India, Reliance Industries down another % too. So banks, commodities and the usual suspects. That's the eclectic mix of stocks which are pulling the index down in today's session. No surprise at all. 2 or 3 pockets that I quickly want to mark before I hand it over to Navneet. One, the set of stocks which corrected quite strongly yesterday, GST, excise hike fears, and United Spirits, Radico Khaitan, Som Distilleries, Pioneer Distilleries, you name any liquor stock, and that was down and out yesterday and down at the 1.5% in today's session too. Couple of other stocks, I think the newsmakers were the construction companies, and the order inflow continues for them. Dilip Bilcon now crosses the 1,000 mark. Remember, in a falling market, this one has nudged its way up from 930, 935 odd all the way to 1,000. So really strong show. And Sadbhav Infra too up about 1.25%. Ashoka Buildcon, which spoke to us yesterday, up about 1% too in trade. Just quickly want to mark Gayatri Project. Since we're talking about construction companies, GMO has bought into this one, and that one is about 0.5%. Navneet.
Rich, I want to start off with the Adani Group companies. They're one of the top losers, as I can see. Adani Power, Adani Enterprises, Adani Port, all three of them are starting today's session on a negative note. Remember, Adani Enterprises fell nearly 9% in yesterday's session. So the cuts that we've seen in the morning sessions are between 2 to 3% for all these stocks. Besides that, you've got a whole host of other stocks which will be in focus. Vakrangi has once again started the day in the green. You've also got Indian Hotel, which is up 1.5%. There was some press release by the company yesterday where there'll be some interstate transfer of the promoter holding on March 13th. So I think on back of that, that started the day on a positive note. let's just check a couple of stocks which are in focus on back of news. Dilip Bilkon, which is one order of 917 from the state of Jharkhand. That's starting the day on a positive note. Ashoka Bilkon 2, which is in focus after the company's been declared L1 for 3 road contracts worth 2992. So Ashoka 2 starting the day on a positive note. And pull up Torrent Pharma, I guess that's the one which will remain in focus, as the company has said it's ready for a €2 billion binding offer for Sanofi's European unit. Remember, that was a report which came in Mint today. That stock's just starting on a very, very flat note. But besides that, I think Neeraj has already highlighted United Spirits. Let's just pull up Titan as well, where BofA ML has increased the target price. Titan, okay, just a flat opening there. But couple of these fertilizer stocks, Neeraj, I was checking yesterday also, they've been gaining. So pull up something like Madras Fertilizer, Fact as well. Both of them have started the day on a very positive note with gains of nearly 5% respectively.
Okay. That's the sum and substance of what's really happened in the first 4 minutes of trade. Before we thank you, gentlemen, Gaurav, Bissa, anything that pops up on your screen?
As I mentioned, McDowell is one. It's trading just about the crucial support of 2980. Below that, I think it's a good sell. Support of 3020, and the targets can be around somewhere around 2890, 2900 intraday basis.
Okay, so just above those crucial support levels, I think below the 2980 mark is the sell from Gaurav Bissa. It need not be a stock called Chandan Taparia, but anything that pops up on your screen, anything that stands out for you as a trade?
Yes, looking at IGL, already discussed, and SCL Tech Mahindra is the other stock where I'll be keen to watch. Stock has not witnessed major selling pressure on last trading session, holding the gains well. Until it holds above 600, 667, it has potential to hit and start the next leg of rally. And selective IT stocks would be focused if market corrects because of the US dollar combination. So those who are looking for the long side can look at the IT count.
In fact, Neeraj, as Chandan's highlighting IT stocks, you've got stocks like Mindtree, which corrected in a weak market like yesterday. But once again, there's some buying which is coming from those lower levels. So Mindtree is trading in the positive. If I have to look at the F&O stocks, only Hexa, where HCL, Mindtree, TCS are right now topping the charts.
Well, and the broader markets haven't corrected too poorly, I must add. Chandan and Gaurav, of course, take a moment to thank you, gentlemen, for joining in today and giving us your perspectives. Really appreciate your time. I was just saying that the broader markets haven't had deep gashes for now. Let's wait and watch if these worsen. Deven, Choksey, last couple of thoughts really. Firstly, on the Adani Group, since yesterday, in the eye of a storm, maybe the tweet from Subramaniam Swamy, but maybe the general market weakness tends to bring out the worst from traders who trade in these stocks. They were down and out yesterday, starting off slightly lower today as well. What does one do here? Because I mean, not all the companies within the group have problems.
Yeah, Neeraj, I think if you look at Adani Enterprise, Adani Port, both these companies, the debt equity ratio remains, I think, well below 1.5 times. So considering the infrastructure nature of the business, I think this is not a higher debt at all, I think, for sure. Look at the Adani Transmission, which is another company in the infrastructure space, which has a debt of around 3 times, but at the same time, I think the transmission line business has a higher EBITDA margin of 90-95%. So free cash flow definitely, I think, supports the company and its business. The trouble in the portfolio is power, as is known, and I think where the debt equity ratio is higher, even the debt component is higher in the balance sheet. And that's where I think the company needs to address, or the group needs to address the situation, which they, I believe, are covering themselves up with. I don't think that at this point of time, I think one should be going completely nervous on this particular subject. I don't think that the company is financially precariously placed. I don't think so. Maybe I think India will have to learn how to deal with the companies which are passing through troubled times, and I think how to, it should be supported in the troubled times vis-a-vis, I think, killing them. By killing those companies, I think you are probably going to ruin yourself more than otherwise. That is my viewpoint. So I think the maturity level probably is missing in dealing with the financial situations in the country, and that is why I think media as well as politicians, they operate with, I think, a knee-jerk reaction. Maybe I think these are my personal views. I believe that I think some more maturity is required to deal with the financial mess when it happens within the country in respective companies.
Okay, Deven, we'll leave it at that note. Appreciate you joining us today and giving us your views on the markets.
Thank you.
Well, Nifty is now down almost 50 points. We breached the 10,200 mark for the day, so not a great sign. 10,197 is where Nifty currently trades, and almost 200 points lower for Bank Nifty. 24,260 is where Bank Nifty is right now trading. I want to pull up the India Wix. Remember, last two sessions, India Wix has been surging quite sharply. It's been above the mark of 16. So India Wix is also trading in the green around the mark of 16.4. Well, let's get our next guest on the show. Andrew Holland, Chief Executive Officer at Avendus Capital, is joining us on the show now. Hi, Andrew. Good morning to you. And thanks a lot for joining us today on Bloomberg Quint. Andrew, what have you made of the recent correction that we've seen in the Indian markets? Will you use this opportunity to buy on dips, or there is more correction which could come by?
In the very short term, there could be more correction. I mean, the worrying thing is that, despite, say, yesterday global markets were very strong, our market, fell again. So we kind of decoupled a bit from the global, the global kind of rallies in the past month actually, and that's all back down to the banking system. And I think the problem with what's happened at PNB is that we don't know if there's any problems anywhere else, and I think that always kind of scares the market. If they don't know something, then they'll sell first and think about what to do next once the dust settles. And I think that's the pressure that we're seeing for the Indian markets at the moment. And if you couple that with what's happening globally, where I think the resignation of Gary Cohen is quite a big negative to my mind, because from what I read, he's resigned on the basis of tariffs being introduced, but it's probably just not that steel tariff. It's more to do with maybe more tariffs which are going to be, or protectionism by the US which is going to come in, and that I think will spook the markets a little bit more going forward than probably meets the eye of just someone resigning. So I think global markets could be in a bit of pressure as well. So that will exacerbate what we're seeing in India as well. And obviously, if there's a risk-off trade, then foreign funds will quickly hit the exit as well on quite a number of their larger holdings.
Andrew, in fact, I was reading one of the reports which did suggest that if the tariffs are extended to gems and jewelry, or even to the pharma space, basically the export-oriented sectors, there could be more pain for India, because so far steel and aluminium may not impact so much, but considering the prices are determined globally for these commodities, that's one factor which could weigh in on all of them. But Andrew, I'm just sticking to the metals space, because we've not heard anything outside metals right now. In case if US goes ahead and imposes tariffs on steel and aluminium, though India doesn't export too much, but if that happens, do you see the prices rising globally for both these commodities?
I'm not sure that would happen, because where do those exports which were going to US go to? So there actually could be some dumping by companies or countries just to kind of unload that excess stock, which can now not go into the US. So I'm not sure I'm a buyer in the fact that prices go up. If anything, I think prices could go down. So that's the upshot of that. I mean, all the reports I've seen have said it's kind of pretty neutral. Trump is negotiating really for NAFTA. So there's certain countries that definitely get hit, which is Canada, Russia, Europe, and South Korea. But I think there's a wider implication, because everyone's saying, okay, China's okay, but China exports to someone. And if you all of a sudden find that they can't export because that consumption now, say in Europe, is trying to be consumed in Europe rather than to the US, then that just leads to pricing pressure. So that's my concern on the metal prices. But overall, I think it's what will worry the market is not just that, it's what's next and who's next, and whether the European Union and China will do something in terms of retaliation on this, and if that happens, then we get into a protectionism stroke trade war, which I don't think anyone really wants.
In fact, one of the reports suggested that in one of the meetings by Gary Cohn, he highlighted if US goes ahead and imposes tariffs on, metals like steel as well as aluminium, that could lead to higher input prices for downstream companies which use these products for their final products. But I'm going to shift focus to the IT pack. Now, Andrew, if I have to look at 2018, markets may have corrected, but one space which has been outperforming is the IT pack. The Nifty IT on YTD basis is up nearly 10%. Have you missed the bus here? Do you see any opportunities at these levels?
So we moved our stance about 6 months ago from more negative to neutral because valuations were actually looking more attractive to us. And whilst we're not saying that you're going to get to the growth levels of years gone by, we think that kind of the worst is over. And it's in these markets is a place to hide. And at some point the dollar will get stronger after a lot of this kind of trade war kind of problems kind of play out over the next few weeks. So that probably augurs well for a rupee to depreciate from here. And anyway, I think the rupee will probably depreciate because I'm not seeing that the tax collections are so great at the moment, and I think the fiscal deficit's going to come under a bit more pressure. So I think the rupee will depreciate, probably to 66, 67, and that will give a better fillip for the IT companies overall, and maybe that's what the market's trying to price in at the moment.
Andrew, good morning. What about banks? They are now in the eye of the storm for other reasons. PSU banks were always there, and we of course learned that the government will get back to the drawing board on the PSU bank recap plan. But this whole private banking stocks, set of stocks being now getting dragged into the eye of the storm, what does one do here?
We've kept really to the private kind of retail banks rather than the corporate banks. So we continue to be happy in that space. As you know, I've been hugely negative on the PSU banks, and I can't see anything that's changed that. And if anything, now we're just waiting for the next penny to drop in one of the other banks, if that is the case. But there's no reason to rush. There might be value. You can say that there could be value, but I think that's what it's going to remain at the moment until we feel more certain that there's no other problems in the sector which can come and surprise us. So you don't need to be in the PSU banks. I think some of the corporate banks are starting to look more attractive, but again, I think let the dust settle a little bit. But might start nibbling away in some of the corporate banks.
Andrew, that's the problem though, isn't it? 35% of the weightage is now arguably in a spot wherein it's difficult for that pocket to attract large fresh money. Retail focused private sector banks, too expensive relative to the others. Corporate facing banks, probably attractively priced, but people are still in tenterhooks whether to bet on them or no. And every now and then they get caught into almost everything that the PSU banks are caught into as well. And PSU banks are anyways a no-no. How does this sector attract money?
It's the point where you say that, and I'm talking about the corporate banks, where that the valuations have taken to a point where it's pricing a lot of bad news. And so therefore you can start nibbling away at the stock. You don't have to go full in straight away, and see if your timing, you could be 5% too high, but as long as you get into it for the rebound which will come, then I think it's worth doing. And I think we all know that the next one quarter, or this quarter ending, is going to be terrible for all the banks. It's not it's not as though the RBI rules have not been known. It's been known for a few weeks now of what's going to happen with NPAs. So I don't think the market probably is waking up to that, and it really didn't do much in when the first news of the PNB fraud took place. It was really the PSU banks which were hit. So I'm a little bit more optimistic, and I say optimistic meaning cautiously optimistic, that the value is starting to come into the corporate banks. Whether today is the day to do it, I don't know, but it's looking attractive.
Viewers, keep in mind, by corporate-facing banks, I think what the general discussion points tend to veer towards are stocks like ICICI Bank, Axis Bank, and Yes Bank, amongst others. These are the ones which have a large corporate exposure, as opposed to banks like HDFC and Kotak, which also have corporate exposure, but very high retail exposure as well, which is not as risky. Which is why you constantly hear these comments about corporate-facing banks, retail-focused banks, and the PSU banks. That's the distinction that you got to make. Keep in mind, ICICI Bank, as we speak, is the top loser, down about 3% at 285. And this is not the only day. I mean, the last 1 month, ICICI Bank has really taken it on the chin.
That's right, Neeraj. In fact, markets are still hovering around those levels of 10,200. But Andrew, two concerns, which majority of the FIs have been highlighting about the Indian markets in the recent past. A is the valuation; they are on the higher side, and B, the earnings growth. Though Q3 expectation was that the earnings growth could be better because of the low base we were staring at of demonetization. Companies like State Bank of India and a couple of other companies dented the Nifty EPS, I would call it, for third quarter. What's the sort of growth trajectory that you are now seeing for FY19 in terms of earnings, and what is your view on the current valuations?
So, I mean, current valuations are still a little bit rich, and we'd always like to see them a bit lower. But that said, for 18-19, we're looking at GDP growth of anywhere between 7 to 7.5%, and earnings growth of around 15%, which is the first time you'll see earnings growth in the past 4 years or so. We've always been disappointed. So I'm more optimistic on the earnings front than I have been for many years now. So I'm less worried on the earnings growth front. I'm more worried on some of the shorter term things that the markets kind of probably ignored, like the fiscal deficit and higher interest rates, which is all having this short term impact on sentiment. But once we're through it, then I think going into next year, then the earnings growth will support the valuations. And what I'm thinking is that rule of thumb is that markets should go up in line with earnings. So that's the kind of returns I'd be expecting. I mean, obviously, it's going to be a lot more volatile than 2017. That's for sure. And maybe that bull market and complacency which we all had up until the middle of January is probably gone for some time now, and that's no bad news either. So I think the reality of valuations is starting to, the high valuations has played also a kind of a negative part in this fall. Are we at valuations which are kind of banging on the table, cheap valuations? No, and that's what foreign investors are citing as being part of the reason. But I think part of the reason, excuse me, is more global than it is local.
By the way, Minna Industries is down 10%, 1,050, and the Adani Group stocks are now looking very, very weak. Adani Transmission down 5.5%, Adani Enterprises down another 5% in trade today. I believe Adani Port too would be down. Adani Power, I'm sure, is not looking all that great. Adani Ports too down about a couple of percentage points, not looking all that great. Andrew, before we thank you, some of these usual suspects that tend to get battered down a lot when the markets come off. Every rumor, however substantiated or otherwise, tends to impact sentiment on these. What does one do here? The Adani Group stocks, and there are some good names out there, or for that matter, some of the other group companies of groups which are slightly under a bit of stress.
It's some of these groups we haven't really invested in. Partly for the reason is that on when markets rise, these are the ones which also have positive rumours around them as well. and you just don't know when the negatives come for these. So the fundamentals for some of the companies are very good, and obviously we'll look at the valuations as they get hit on the way down, because they'll all be kind of pushed into the same boat, and the share price is falling. But I think at the moment there's other quality companies which I'd probably look to and concentrate my mind on, like I mentioned, the corporate banks, where I can see there's real value, for other reasons than just negative rumors.
Yeah, I understand. I don't think there is a simple answer for this, Andrew, but I appreciate you trying to answer that question as well. But thanks for taking the time out and joining us today and speaking to us at Bloomberg Quint.
Thank you. That's
the view from Andrew Holland of Avendus Alternate Investment Strategies. Need to take a very quick break on the note that we're now down at the lowest point of the day, 0.5% for the Nifty. The Nifty Bank about 205 points, so it's not shaping up to be a good morning. And the world may not be as happy a place as it was yesterday. Keep that in mind. Well, let's see. We are getting ready to break 10,200 and moving closer to the 200-day moving average on the Nifty 50 as well. Take a break, come back, and talk maybe about some positives. CRISIL has come out with a report talking about India's economic outlook for the coming financial year. DK Joshi of CRISIL will join in to speak about that.
job, अरे 5 to 9 job, भाग दौड़, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
On 26 November 1949, the Constitution of India was adopted, recognizing liberty, equality, and fraternity as the principles of life, which cannot be separated from each other. The government of Karnataka has imbibed the ethos of the Constitution by developing programs and policies aimed at creating a socially, economically, and politically just society. Karnataka's flagship programs such as Maitri, Annabhagya, and Arivu have created an equal opportunity platform for all, irrespective of their gender, economic, or social status. Karnataka is committed to encourage education through various welfare initiatives, ensuring equal status for women and empowering minorities to uphold every individual's dignity. In the last 4 years, Karnataka has formed 462 new Gram Panchayats, which has taken the principles of democracy to the grassroots levels, and our Progressive Vision 2025 document engages public government participation to build a better state for all. Karnataka's collective vision to endorse fraternity, justice, and equality has transformed into Karnataka's model of development, which is based on the tenets of the Constitution.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Welcome back. You're watching Indian Open right here on Bloomberg Quint. It's not turned out to be a happy hunting ground early morning trade today. What we desperately need for the world and maybe for India is growth. CRISIL has put out its India outlook for 2018, and it makes an interesting observation at the very outset. There are 4 R's that matter right now: the timely resolution of stressed assets, rejuvenating the rural economy, relentless implementation of reforms, and recovering global growth. They also have thrown in a caveat in the report which says that the Indian economy is running on only 2 cylinders right now. Joining us to talk about what's working and what's not is CRISIL's Chief Economist DK Joshi. Good having you, Mr. Joshi. Thanks so much for joining in. Now, just before I get to the note, something related to the note. One of the key pillars that you have spoken about is global growth, looking robust, but the headline, of course, said not so sustainability. Do any of the recent rhetorics on the trade wars, and if they worsen, put a question mark on what everybody safely assumes will be a good year for global growth?
Well, not immediately. I think these measures are, first, they have not been cast in stone. I think it's still work in progress, and I think it's not going to destabilize the global growth story, at least in the short run. I think what it's going to do is, I think over a period of time, is the trade was again picking up, and I think the trade intensity of global growth might go down as a result of these measures. But I think overall GDP growth for the world economy is likely to be in 2018 much higher than 2017. So we don't see it as a risk to global growth. Though I think it will eventually, it will have more implications for specific countries, let me put it this way.
Okay, now let's, I just wanted to get that equation out of the way. Now let's, for the benefit of our viewers, tell them what is it that you're penciling in 2018 for the world, and as a result of that or otherwise, what's the kind of growth numbers or the nature of growth that you're pegging for India for 2018?
Well, I think for the world economy, we are assuming 3.9% GDP growth, which is the latest IMF forecast. And I think for India, we see the growth, the GDP growth at 7.5%. It is driven by the following factors. Number one, the recovery in global trade will also rub off on India. Because in 2017, we could not take advantage of the global growth because of domestic issues. The GST, particularly the issue of refund payments to the exporters, I think that got delayed, and as a result, I think exporters faced liquidity issues, and they could not take full advantage of the global recovery. So I think that scenario is improving. So the ability of trade to contribute a little more, I think, than last year, I think will be visible in 2018. So that's one factor. The number two factor is that, well, the base is very weak. I mean, so statistically the growth will look up. 6.6% is much below the trend rate of growth of India. So I think what we are saying is that from 6.6% it will go up to 7.5%. But I think on a sobering note, that even 7.5% is below the average of last 13 years, which is a little over 7.6%. So you're not even, I think you've not even touched the trend line as yet. And the other factors which will drive growth is the assumption of a normal monsoon, and the indications so far are that the monsoons will stay normal this year. The El Nino effect is likely to play out, which means good rains. So I think under these assumptions, growth picking up to 7.5% shouldn't be a surprise.
Would that be the base case, 7.5, and the bull case maybe slightly higher?
Well, I think the upside is not too much. I mean, from this, let me. I think the downside can happen. I think if if your GST glitches continue or the monsoons fail. But the upside from 7.5 is very limited, I think. So it's an asymmetric boundary around the 7.5%.
Now, in the executive summary page of your report, Mr. Joshi, you've mentioned one key point about, and I want to understand from you the importance of this, resolving the NPAs through NCLT, especially from the steel sector, and the unintended consequences as well. We are in the midst of that resolution process. There are, of course, a bit of to's and fro's here, but in all probability, in a month and a half time, or maybe 2 months at best, we'll probably see some conclusion to this whole process. Has it been a good one, and does it bring the dormant capacities, if I can use that term, firmly back into the fray? And how critical is that?
Well, I think it will. Well, I think it's important because I think it gives confidence to the overall market participants that the resolution process is underway, and we believe that it will begin with the steel sector, and its steel sector is one of the largest contributor to NPAs, and the conditions for steel are improving. The domestic demand picking up, and the prices in steel also have gone up. I think that also bodes well. So I think this is the steel is probably the first case for resolution, and once the biggies get sorted out like steel, I think others will also follow. Now that will actually will give a lot of confidence to the domestic players, as I mentioned, and it will also give confidence that the NCLT resolution process is proceeding. So far, I think we haven't seen any success, but I think the success, the indications are quite promising, I think, for resolution, particularly in the steel sector. And as far now, once the issues get resolved, the utilization of capacity, I think, will also improve in steel. I think so that's bound to happen. I mean, and what it means is that the need for investment in the steel sector will be less than, I think, will be lower than as in the base case.
Okay. By the way, some clarifications from ICICI Bank as well. They are saying that there is no exposure to Nirav Modi group of companies. They have clarified on the report of the SFIO summons to CEO Chanda Kochar as well. This is important because that stock was caught in the eye of the storm today. It was down about 3%, now just recovered a little bit of lost ground. They're saying they continue to engage with investigative agencies. The routine clarification is the most important out there. No exposure to the Nirav Modi group of companies. No LOUs. This is an important clarification. Axis Bank mentioned that they had some exposure. Yesterday when the names of these two banks came in, it just kind of disturbed the apple cart of the markets yesterday. Now these clarifications coming in from ICICI Bank, important ones, very important ones at that. No LOUs, no exposure to the Nirav Modi group is what ICICI Bank is saying. Let's see if this has the strength to shore up some of the weakness in ICICI Bank, at least, if not the Nifty Bank at large. That stock is certainly off the lows of the day. Sorry, Mr. Joshi, just had to address that important piece of news as well. One quick follow-up question. You were saying that the successful resolution of the NPAs through NCLT from the steel space might have unintended consequences of pushing back private investments. Could there be a case wherein some of these assets, we don't know where they will go right now, but some of these assets go into the hands or the laps of not the Indian promoters, because we don't have a clear winner emerging out of this whole process from the buyer side, and therefore these expansion plans that the large Indian companies anyways wanted to put up will also have to be put up, because there is competition that is coming in from foreign players. What if ArcelorMittal gets a foothold in a meaningful way in one of these assets? What if Liberty House manages to get a foothold into one of these assets in a meaningful way as well?
Well, some of these permutations and combinations are possible. I think I don't want to speculate on what's going to happen, but I think in a case where I think, so I think it is a possibility, but I think we do see as when the capacity that is stuck up opens up, I think that means you have more output, potential for more output coming into the system, and thereby the less requirement for investment. I think that's the simple point that we were trying to make. And I think overall, as far as the private investment cycle is concerned, I think this is only going to impact a part of the private investment. I think it's not that the overall private investment cycle is going to be pushed back because of this.
But you would believe,
I think it's only limited to a part.
Okay, would you believe that the private investment cycle is at least 3 quarters out?
Well, I think it's looks like, I think it's there's some stirring there, but a robust recovery in private investment, I think we still don't see it, because I think at an aggregate level, in the manufacturing sector at least, there are excess capacities in the manufacturing sector, and I think on top of that, if you look at most of the infrastructure firms, I think they are still in the deleveraging process, which means that they are more focused on improving their credit profile, on improving their capital structure, than on chalking out and executing investment plans. So I think that in some sectors, I think, like let's say auto, or in sectors where there is a push from the government like renewables, I think private investment is looking up, and also in the road sector. But overall, I think the kind of revival that you require in private investment to push the investment to GDP ratios up significantly, I think that is still some time away, at least 1 year away, I think.
At least 1 year away, so at least 4 quarters out, if not more. Okay, the other point is this whole rural rejuvenation. That's the one key point that you're making, and the impact that, I'm just adding up, the impact that has on jobs. Now, we've certainly seen some bits of it playing out. We're seeing more evidence in terms of the kind of road orders that are coming in across various states in the rural areas, affordable housing getting that push in a big way. And I must add, Mr. Joshi, since we're speaking about jobs, the quantum of emails that are coming into our inboxes right now telling us that if we want to apply for government jobs, including companies like Air India too, there seems to be this big push towards job creation in a meaningful way. How important is that?
Well, I think I particularly want to highlight here the rural economy, because rural economy, everybody knows, went through distress. The slower growth in construction over the last couple of years, the rural wages were not rising above the inflation rate. So there was a distress, and construction activity, whether it is roads or it is housing, matters hell of a lot. I mean, just to give you one statistic, in the year 2000, share of construction sector in rural employment was 3%. Because construction sector grew very fast, particularly in the rural areas, the share of employment in construction sector increased to 11% from 3% in a decade. I mean, so by 2010-11-12, it was 11%. Now, if you manage to push the construction activity up, what it means is more jobs, particularly for low-skilled people in the rural areas, and it also means more consumption, because the poorer people, people who take up these jobs, they have higher propensity to consume. I mean, they spend most of what they earn. So I think from that perspective, so that is one part which this initiative will address. As far as the jobs, I think in the corporate and final and corporate sector are concerned, I think that will depend on the economic conditions that are playing out, on their requirement, etc., and will vary from sector to sector.
Okay, that's a point well taken as well, Mr. Joshi. I have one last question, and I'm tying in that with what is maybe more pertinent for the markets as well. You mentioned that corporate performance will mirror macros and EBITDA growth to hit double digits. Now, does this, you think this would happen even if banks are caught in a bit of a limbo? As we see right now, it's only PSU banks for now. That probably impacts lending only to a particular sector of corporates. But if there is some more troubles that we come up with, would corporate growth and thereby EBITDA growth still be able to do well with the tailwinds that we have for the economy?
Well, this is the base case. Obviously, I think if there are headwinds coming from as you just mentioned, I think that will have a bearing. But I think as a base case, as a case which has a maximum probability, we do expect, I think, the top line growth to be much better. And I think one should be happy with this, because the inflation rate is still under control. I mean, so you're getting real growth of about even if you get a nominal growth of a little over 10%, you're getting real growth of around 5.5%, which is, I think, which did not happen in the last couple of years. I mean, it was the top lines were almost flat. And so I think all I'm trying to say is that this, even with some headwinds, I think this will still be a better year compared to last year.
Well, don't mind, Mr. Joshi. I'm glad we brought out all of these points. I was just trying to play the devil's advocate and try and see, whether there are any downside risks to the assumptions that you made. All of them very, very valid points. And lastly, I mean, we don't have time to discuss that, but they're also making a point that the progress on reforms is mixed. So big traction is unlikely to come out from that aspect. Mr. DK Joshi, thank you so much for taking the time out and speaking to us today on Bloomberg Quint on your India Outlook report for 2018. Appreciate your time.
Thank you.
Well, that's the view from CRISIL on their India Outlook note. As we speak, the markets have recovered a fair bit. I think post this ICICI announcement, there's a bit of a surge that's come into the Nifty Bank. The Sensex is now down just about 31 odd points. So, well, let's see if today's a bit of a reversal of what we've been seeing the last few days, which is last 5 days at least, which is a sell-on rally or the markets opening at a high and coming off. Let's see. It might be too soon to predict, but let's see if today's a reversal of sorts, where we start off over 0.5% lower and then tend to recover a little bit of lost ground. For now, the Sensex looks almost set to break into the green. Good time to take a break. When we come back, hopefully the Sensex will be in the green. The FNO show will take up the action on the other side. Thanks so much for watching today's Indian Open.